It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another week of real estate news from coast to coast on our Sunday morning. And what a very, very busy week it has been, of course, with the RBA rate cut by 25 basis points. It is a Sunday, August the 17th, and we got our week underway with Taylor Lee Bambara, and she was from Townsville, talking all about the dynamics and just how quickly that is changing. We went from Townsville to Richard Faludi into Double Bay, and you couldn't go from two different markets, could you? We talked about Coogee, Rose Bay and Bellevue Hill, all placed in Australia's top 10 suburbs for house prices. And then what happened was we were talking about the latest profit and loss report from Domain, illustrating just how out of control Sydney house prices are. We spoke to Nicola Powell, the standout, I still can't believe, first half of this year, 6 months growth of $700,000, the median on those property prices in Sydney. And then we rounded off the week by talking to Leah So, and she gave us the breakdown on Goodna in Queensland. So that is all coming up next, right here on your Sunday morning real estate breakfast.
We are your local source for unbiased, expert insights into the world of real estate. We are not a real estate company. Our only objective is to help you better understand the real estate market.
Oh, absolutely. And it's also bringing a lot of people to Townsville because at the moment, in a way, the best way to explain it, it's still affordable because we can foresee the change coming. And if it's going to follow like Brisbane and the rest of Australia, it's going to get tough. So with the money they're pouring into Townsville, people are trying to get embedded now.
Yeah, that is true. And I just want to circle back to Garbett with this report from PropTrack. Now, that range I mentioned from 341 grand in Garbett to 861 in Manly, that lower entry point, boy, all the eyes are on Garbett for that very reason.
Correct, because in a way that just shows you where we're going, but it shows you where we're at the moment. And we are finding a lot more people, and that price will rise because a lot more people can afford units over the house prices these days.
Can you run through the median house price both on the units there in Townsville as well as the houses?
The units were averaging between the 300 to 400,000 on units, whereas houses have gone that bit more expensive. They've gone about 550,000 to around that 700,000. It is quite a wide range. However, because we have got a lot of buyers around and that competition, it's very hard to pinpoint that median one because it's just increasing.
And I want to get on to the subject of why selling off-market could cost you thousands of dollars. Now, we've all seen people, especially on social media, different agencies, different companies saying, hey, look, I've got this off-market property and, you know, it's a good one, blah, blah, blah. But selling your property off-market means basically you are skipping public listings and advertising. And I've said it in the past, it is in the name. Off-market is not mass market.
That is correct. And I have a saying, off market is under market. And the reason I say that, the buyers set the market. And if you're not willing to get your property out there, you're going to be selling under that market value. And the reason being, you send a property live, you're hitting hundreds of thousands of people. Whereas if you're working one-on-one with an agent to do off market, you're anywhere between one buyer and maybe 6 buyers. So you're limiting that buyer competition, the buyer interest. And we've got a lot of Southerners wanting to move up here. So we're finding if you're reaching out to a couple of investors or a couple of locals, you've just cut your buyer pool by about 96%.
Now, how frustrating is that? Because you talk about the lower sale price, you know, a smaller audience means fewer higher offers. That is the key. And on the open market, multiple interested buyers are more likely, you know, to push the price higher. Hence, you're not going to be missing out on the best possible price.
Correct. And we're also finding as agents, someone in that same suburb, when we're going to do an appraisal on their property and we see one that sold 2 doors down for such a low price, the first thing we do is go, yep, off market, because that's not its true value. So you can't even include that as a comparable because it's not fair to the seller.
So what do you say to vendors that hear this term off market when somebody says, oh, I want to list your property off market? What's the information piece that you would advise, because vendors are listening right now to the podcast, what would you advise these people to do when they hear those words, I want to take your property to off market?
I just say to them, would you like me to bring you one offer that you may be okay with, or would you like me to bring you multiple offers where you get to choose where your house sits value-wise?
Hey, it is a Tuesday afternoon, and we know what that means. It means that the RBA has been very, very busy deciding what they're going to do with regard to the cash rate. Hopefully it is good news. Let's go to Anthony Landau, our mortgage guru in Sydney. What have they decided to do?
Look, as expected, they have dropped the cash rate by 25 basis points, which is good news, and it was probably expected news on the back of last week's inflationary data, where we saw inflation rising just 0.6%. It's the lowest rate in 3.5 years. It's at 2.7%, well within the target range.
And I just want to talk about these investors that might not be able to get into your area. These price increases in the double bays, in the Coogis, etc., they are going to affect the outer suburbs. And I just wonder whether people should be looking at some of these outer suburbs for growth.
Well, I think it's a logical move, right? Because ultimately, not everyone can live within the eastern suburbs. And I think with the change in zoning, we are going to see more density in the east. You know, it makes logical sense that, you know, buyers that are ultimately looking to buy kind of in Bellevue Hill, Rose Bay, Coogee, Tamarama get pushed out, you know, and so therefore long term that has an impact on some of the suburbs that are kind of on the fringes, or fringe rather, of the eastern suburbs. They will by virtue have price increases, which I suppose provide an enticing opportunity for an investor to go, I'll buy this today at X price with the knowledge that it'll be Y price down the line. I think, look, generally speaking, property, particularly in the eastern suburbs, only goes in one direction over time, which is up. But I would say that will end up being the case more broadly as time progresses.
Yeah, so as I mentioned, a lot is going on. And if you look at Rose Bay with their changing zoning laws, how is that in 2025 going to be affecting the price?
It's an interesting one because the change in the LMR or the zoning has actually impacted multiple suburbs, not just Rose Bay. But what we are seeing as an office, and, you know, we've kind of spearheaded this change, what we're seeing is that it seems to be impacting Rose Bay more than the other suburbs. For example, our office has sold, I think, 4 or 5 sites. I've sold one personally for, it was circa 30 million, where the houses were probably worth, I would say, probably $6 or $7 million each. There was another one which a colleague of mine sold along Dover Road, where, for example, one of the properties struggled to sell for 8. They ended up getting 16 because essentially with the change in zoning, what's feasible or potentially feasible in these areas is significantly more. And so that therefore lifts the value of some of these properties significantly, almost double. But the counter side to that is that there are a lot of people wanting to actually sell out of the area because they don't want to be in a suburb where there's lots of density, which is going to be the long-term impact of this. So, you know, I suppose there are winners and losers on both sides.
And I want to circle back to something we were talking about yesterday, and that was off-market sales. There could be an argument that because you're in an exclusive area, that, you know, these high price tags, some people, they absolutely cherish their privacy. Is this a case of maybe saying, well, yes, an off-market suits us, although I still stick with it. It's not mass marketing and you're probably not going to get the best price.
I think that if you look at off-market versus on-market, look, at the very, very high end, off-market does seem to be kind of a growing trend where, you know, these properties that are trading at 30, 40, 50 million and beyond are selling very discreetly and quietly. However, if we're talking more broadly, I tend to think that, as an owner, and the agent, how can you have conviction that you are achieving the maximum price when you've only had a couple of people through and then receive an offer? You don't have enough information to substantiate that. One thing I will say, though, is that I think off-market has a place in a campaign and a process. And that's usually leading into, the formalized approach, or as you've said, mass marketing. So you're bringing through some key people who have the right capacity and right criteria before starting the campaign, because then that provides you with a lot of momentum leading into that process. But I think just selling off market in isolation doesn't really yield the urgency and doesn't really provide enough information to substantiate that you're achieving the maximum.
Now, this profit and loss report, as I mentioned in the setup, I don't think most people would pick that price, that house median price across the country in the first half of this year at $365,000. That is an awful lot. Yes, of course, you've got the super expensive properties, especially there in Sydney, that is pushing along that median price. But then you look at Sydney itself and that median, $700,000, the equity gains for people, life-changing.
It's extreme. This really creates that wealth effect. It really showcases that owning property, transacting property really does help to build financial wealth for your family and intergenerational wealth. These figures are extreme. It's been driven by two main factors, and that is rising property prices. We have seen momentum coming back into our housing markets. We've seen price growth across all of our capital cities over the last 5 years. But the other aspect is we are staying in our homes for longer periods of time. And what that allows homeowners to do is it gives owners more opportunity to build equity and then realise those capital gains. But, as you said, this is hundreds of thousands of dollars being made on the property when it goes to being resold. And, we're talking about median profits. So there's going to be a massive chunk of Australians that have been achieving much higher than this median gain.
Very hard to save up $365,000 in 6 months, that is for sure, let alone the $700,000. As far as the houses are concerned, you guys have reported this is the highest proportion in almost 2 decades for houses. I mean, that's quite something in itself.
It absolutely is. So it's just under 97% of houses that were sold over the first 6 months of this year resold for a profit. So it means that homeowners are walking away with money gained. Very small proportion of sales are occurring at a loss. It's roughly about 3% of sales nationally. So what it really tells us is loss-making resales in the property market are very rare. And I suspect the loss-making ones are really driven by people that are owning their home for a short period of time. Perhaps personal circumstances change, or they've paid over the odds when they actually bought the property. We know in the property market, it's all about buying well, but it's also all about selling well too.
Yeah, and when it comes to units, yes, we know that the units are not going to generate as much, but still, the units, that is a strong performance for 3 years. It is the strongest result for units in 3 years. So, for anybody that's sort of bought these units and been thinking, well, it's not a house, the gain has been there. Yes, it's fair to say there are a lot of units that have sort of just remained the same. Some have gone backwards this year, but for many, it has proved to be a very prudent investment.
Absolutely. And I think this was one of the figures that I was quite surprised about, pleasantly surprised, I should say. And that is the fact that the profit, the median gain on a unit resale nationally was $202,000. That was probably higher than I expected. And when you look at the median gain and the change, that has increased just over 15% over the past year. Whereas when you look at that figure for houses, that's increased 10% over the past year. So the median profit being made on a unit in Australia has seen a larger uplift than houses. And that aspect surprised me. I think it does depend probably on the location. Some of those locations, so for example, Brisbane has seen one of the biggest changes in median gain, as well as Perth. And that really does align to some extreme rates of price growth that we've seen coming out of these markets. It's really being led by Brisbane, Adelaide and Perth in terms of that gain. But yeah, again, hundreds of thousands of dollars. But I would say with the unit market, goes back to that statement I made about it's about purchasing well as well as selling well. And it's buying the right type of unit. We have a larger proportion nationally of units selling for a loss. It's just over 1 in 10 units are selling at a loss. So it's about 12% nationally. And that median loss is sitting at $46,000. So I do think it is crucial to be buying the right unit, the right apartment in the right location to really set yourself up for that capital growth.
Just give us a little bit of a breakdown on where Goodna is, Leah, and what makes this an attractive area to buy into.
Yeah, so Goodna is located 25 to 30 minutes out from Brisbane CBD. It's one of those suburbs that were, is a very quiet suburb. Demographic has started to change, hence why we're seeing the growth in the area. Properties in Goodna during the COVID period, it was still very slow. We weren't seeing that boom that everywhere else was seeing. Goodna was the last to come up. It's one of those areas that we're seeing a lot of people from the north side of Brisbane come in, Brisbane CBD. They can't afford necessarily out those ways because we're seeing, medium house value at just over $1 million over those ways. So they're coming over to Goodna. They're finding it quite central to everything. Multiple train stations nearby. Got shopping centres in a 10-kilometre radius, large shopping centres as well. So it's just a great area to be in, especially, now that everything's evolving and it's all changing. It's a hot spot that everyone wants to be in, surprisingly.
Now, what is the population of Goodna? And let's just do the breakdown on the median price. I think you mentioned the house median there. Also, what is the median price for units?
Yeah, so house median at the moment is sitting roughly around that $652,000 mark. Personally, my median house price in the Goodna area, because I am a geographical agent in there, is $720,000. Units itself is sitting about $508,000, which has had a substantial growth just within a 12-month period of close to 43% of property growth in there. But units at the moment are now selling for anywhere between that $570,000 and upwards for, your 3-bedroom townhouses. I just sold a 3-bedroom duplex over on Brisbane Terrace for $570,000, which was a huge result for a duplex over there. Population in Goodna is just sitting over 10,000 people in the area, but it is looking to double in the next 10 years, which is going to be huge. So, there is a lot of infrastructure happening at the moment, a lot of infrastructure happening on Brisbane Terrace, Queen Street, Albert Street, behind Bertha Street, just to pretty much accommodate to the growth that we are seeing in the suburb.
Yeah, so those first-time home buyers, they have got in there well and truly, along with those investors. Then you've got the commuting and the public transportation. A little easier to get into the city, is it, from Goodna?
Oh, yeah, absolutely. I mean, with Brisbane CBD, on a good day, you're seeing 25 to 30 minutes to the Brisbane CBD. Within a 5-minute drive from Goodna, there's 3 train stations. So you've got Redbank train station, you've got Goodna and then Wacol. So there's a lot of access to Brisbane CBD. It's very close for everything and it's on the main train line as well.
We connect you to the best real estate information across Australia. The Real Estate Podcast.